Let's take a look at the global picture as we see it today. It appears a bit of a hesitant mood ahead of Ben Bernanke's speech later on.
Yes, I think very much so. And you were just mentioning the latest IMF forecasts, all very downplayed and rather negative. They're still talking of positive growth, but it's only just going to make it. And I think the risk is that we may find that there is a very real factor of slipping back into a double-dip recession in the US and in the EU. And if that happens, then stock markets worldwide are going to come off a bit. And I think in this climate of uncertainty, that's why the markets are saying, let's wait and see. That's why positions have been run down, because it's so easy to get caught out if an unexpected statement is made by Ben Bernanke.
The term now is not QE3 and quantitative easing. It appears that it's an Operation Twist. Can you explain what that means?
Well, what they're going to do is they're going to sell very short-term US Treasuries, that's their government bonds, and that's good value for them. After all, the 2-year Treasury is at a yield of 0.16%. Well, that's close to nothing. And then they're going to use that money, and they're getting big foreign demand for that. So the demand for that stock will be there, and the inflow will come, and they'll use that to go and buy 30-year Treasuries, and that's important. They don't want that rate to go up. In fact, they want to control it and bring it down if possible, because the home mortgage rate is linked to that. And so if they can keep that down, then at least they can keep American homeowners in their homes, and that gives some sort of stability for consumers in the medium term.
In the meantime, with all this uncertainty over what's going to happen, investors are flocking to more tangible assets like gold and silver. We just spoke about silver today. That price has more than doubled in the past 12 months, and we very rarely focus on a precious metal like that, but of course investors are seeing the value of putting their money in hardcore assets.
Yes, absolutely. And just to go on to gold, it really is probably still the ultimate hedge against currencies. And I think that that is why it has been so buoyant. From South Africa's point of view, it's very important. Just 3 months ago, the rand price of gold was 10,000 rands an ounce. Now it's coming up to 14,000 rands. That's a massive improvement. And if the price stays around this sort of level, if the rand stays within the sort of range it is now, looking a year ahead, that's going to be a massive boost to the gold mining industry in South Africa. So there's something good coming from that from our point of view.
And our gold miners all rallying on the back of that. Harmony
Yes.
up 2.7%, Goldfields 2%, Anglo Gold 1.3% to the good. Are the gold miners back in vogue? I mean, very mixed opinions over whether you should have exposure to South African gold miners. Is it time to be perhaps buying despite all the local problems that we have?
Well, let's put it this way. If one hasn't got exposure to gold, one should have some. So it's a question of, it's never too late, I think. And if we're right in expecting the gold price to stay about where it is, we had some of the mining company heads talking of $2,000 an ounce at the end of the year, or even more than that. If we get to that sort of level and it's sustained, then I think you can make every reason to have a stake in the gold mining sector. We're going to find that if the revenue is going to have a huge boost, and I think that'll show in massive increases in profitability. And looking at the returns on our mines compared to the Australian or to the American ones, we are relatively not that highly priced.
Goldfields has put further money into a gold and copper mine over in Philippines. Not much clarity in terms of the reserves that we're seeing there. It's said to be an undeveloped mine. What do you make of its move into this market?
Well, I would certainly like to know a bit more about it, but that just shows their confidence in the global economy. After all, this is part copper, and so that industrial demand is what drives that, and gold as well. So I think that what they're saying is reserves in South Africa are running down, there's no doubt about that, and they need geographic diversification, so that's a good idea. But they've been very thin on information on this, and here they're spending about $350 million, and we don't know too much about it. I think the shareholders in the investment community deserves to be a little bit better informed in this case. I wouldn't go run out Goldfield and buy Goldfields just because of this announcement.
Yeah. SAB, also more clarity on that deal with Foster's coming through, outperforming the overall index, but pretty much in line with some of the large cap stocks that we're seeing today, up 1.1%. Would you be buying SAB at just under 270 Rand today?
I think it's probably a fair buy. If one's going to be buying anything at all, yes. I think that their ability to organize, to keep costs down, to distribute their product is really tops, probably in the world. And so if the deal with Foster's does go ahead, there'll be a lot for both sides to gain from there. And so it would be a good long-term investment, undoubtedly.
Let's move to the food sector, smaller cap stock there, Sovereign Foods. That stock being punished today after a trading update saying that interim HEPS are expected to be between 65 and 85% lower. Now, of course, it is an integrated producer in the chicken industry. Would you have exposure to a company like this when you see earnings reports coming through like that?
No, I don't think so. And I wouldn't be tempted to go in and buy it just because it looks relatively cheap or lower than it was a little while ago. I think that they did say that this huge expected knock to profits is for a one-off transaction regarding the resignation of a director, but one needs to know a bit more about that. And I think that, no, that's not satisfactory. It's not acceptable. I would tend to avoid it.
What is your outlook for the rest of the trading day? We have turned positive here in South Africa. Do you expect us to sustain this momentum?
Well, with luck, yes. With momentum, let's say maintain this level, not necessarily to go a lot higher than we are at the moment. Got to look at international markets. Yes, the Dow futures are looking a little bit better, but I would really like to know what's going to be said this evening, and in anticipation of that, I think the markets will be hesitant. I think they may hold their present levels, but that would be my best case outlook right now for our markets.